All right, let's get right into it. We are tracking a critical situation on the Bitcoin liquidation map, and the numbers are huge.
$48.52 million. That's the number you need to be watching right this second.
And look, this isn't just some random figure. This represents a massive wall of leveraged short positions. We're talking about traders betting millions that the price is going to go down. If price moves against them, boom, they get liquidated. The stakes couldn't be higher.
But here's where it gets interesting. While everyone's eyes are glued to that massive target up top, something completely counterintuitive is building up just below the current price. We're going to break down what that is in just a minute.
Hey, if you're finding this data valuable, do me a quick favor and drop a like and share this explainer. It really helps get the word out.
So first, let's really focus on this $48 million wall. I mean, this is the main character on the chart right now. Just look at those bright yellow bands at the top of the heat map. That's where the pain is concentrated for shorts, specifically between $92,000 and $94,000. And in a market like this, a cluster of liquidity that big, it basically acts like a giant price magnet. And this really gets to the core of how this market works. It's all about the liquidity hunt. You got to think of it like a game of predator versus prey. Check this out. On the left, that's the heat map from just 8 hours ago. See those big pools of liquidity hanging out below 90,000? Okay, now look at the chart on the right from this morning. Gone. Wiped out. The price moved up for one reason, to hunt down and neutralize that liquidity. So the point here is absolutely crucial. Price movement is not random. It is actively and purposefully drawn towards these huge pools of leverage, looking to set off a cascade of stop losses and liquidations. For more data-driven briefings just like this one, make sure you're subscribed to the YouTube channel. You don't want to miss these. Okay, let's circle back to that puzzle from the beginning, that contradictory buildup that's happening right under our noses. I mean, it's a fair question, right? If everyone is feeling bullish and chasing the price higher, you would think that the liquidity on the downside would start to dry up. So why is it actually getting bigger? Well, here's the risk. As traders get excited and pile into long positions, they set their stop losses and liquidation points just below the current price. And now we can see these significant pools forming, one at 88.5 thousand and a really major cluster down near 86.5. All of a sudden, that creates a very tempting target for a move down. This map changes fast. We post live updates on these shifts all day. So for the latest, be sure to follow us on Twitter. So with these huge targets on both sides, where's the next immediate price magnet? Where is price actually likely to go first? And just a quick refresher, a price magnet is exactly what it sounds like. It's a massive cluster of liquidations that, when hit, can cause a chain reaction that literally pulls the price deeper in that direction. Right now, based on the data, the path of least resistance is still pointing up. That $48 million wall above 92K is the largest and the closest pool of liquidity. It is the primary target. It is the biggest prey on the entire map. If this analysis is helping you see the market a little more clearly, go ahead and hit that like button and share this explainer. Okay, let's put all the pieces together. Here's a clear strategic summary. These are the key battlegrounds that you need to be watching. So above 92,500, you've got that $48 million plus primary magnet. That's your short squeeze territory. To the downside, 88,500 is your first real support level where longs start to get into trouble. And if that gives way, 86,500 is the major support level with a huge pool of long liquidations. To stay ahead of these big market moves, make sure you are subscribed to the channel. So if you remember one thing from today, let it be this. In this market, price doesn't just move randomly. It moves with a very specific purpose, and that purpose is to hunt liquidity. The data clearly shows us the targets. The only real question left is, which pool gets hunted first? The shorts sitting up above or the longs stacked down below? Let us know what you think in the comments.